Lily, it seems, as you just mentioned,
Yeah.
Shanghai market players have to stay a bit longer.
Yeah, you're right, Jim. But if we look at the region, we are looking at green arrows today, so it's a pretty good day for the region, despite of the, let's say, deep cuts in Chinese mainland markets. Now, as we were discussing on this, how a flurry of rescue measures from the Chinese government failed to shore up investor confidence today. The Shanghai Composite reversed its slight gains at early trade of the day to finish the day tumbling another 3.5% on top of yesterday's 5.2% slump. So the index is now barely holding on to 3,900 mark. Even though in the final minutes of trade, we see China's big two state-owned oil and gas companies, Sinopec and PetroChina, adding about 8% and 5% respectively, that still failed to shore up the broader market. So sector-wise today, we are seeing growth-sensitive stocks tanking at the back foot, with foreign trade firms, shipbuilders and property counters sinking to the bottom. Real estate developer Beijing Capital Development nosedived about 10%. And however, the cut to stock transaction fees, relaxed margin financing rules did give brokerages a boost. Huatai Securities was leading the sector's gains. So again, today we're seeing about 1,000 stocks in the Asia market, Shanghai and Shenzhen combined, tumbling by the day's limit of 10%. So here's a final tally on other major indices on the Chinese mainland today. The Shenzhen component slumped about 5.3%, and the growth board Chinex down 4%. Let's dig deeper into today's trading actions with our market reporter, Timothy Pope in Shanghai. Good afternoon, Tim. Now, first of all, give us more details on today's trading actions, please.
Thanks, Lily. The afternoon session really did start with a rout. To take one stock that I happened to glance at the time, Haitong Securities, it was up about 4.5% at the break, and within 45 minutes of the market's reopening, it had fallen to 3% below its opening figure today. It did benefit from a late recovery, as did a number of other securities stocks and the Shanghai Composite Index as a whole. But to see the index dip below 3,700 points, which it did briefly this afternoon, really doesn't bode well. There were losses across the board, at least at some stages today. Real estate stocks suffered, some of them quite heavily, as did IT, which reversed a lot of yesterday's gains. But once again, the market volatility really was extreme. And this was fed, at least partly, by some internet rumours that were going around saying that foreign investors had been shorting the markets to engineer a collapse, something that gained quite a bit of traction and forced the regulators to eventually issue a denial. But at least it wasn't a complete wipeout, and we also saw a lot of recent IPOs still rising by the daily limit today.
And of course, we know that the regulators have been working hard to try to put a floor under the market, and it suffers these serious falls and incredible volatility. Tim, take us through the latest announcements, please.
Yes, that's right. Perhaps the most surprising of the moves that's been announced has been the relaxing of the margin trading rules to make it easier for people to invest borrowed money on the stock market. This is really a complete backflip on the policy that the regulator has been pursuing for the past few months, where we've seen frequent reports of crackdowns on margin financing. In fact, as recently as Monday, we were hearing some market analysts question whether China ought to stop margin trading, at least in the short term altogether. Now, the feeling of the regulator seems to be that it needs to do something in the face of this 20% slump, and it needs to really bring some liquidity back into the market. And since a lot of the falls that we've been seeing have been driven by margin calls, a relaxation of these rules does really have the potential to calm things down a little bit in investors' minds.
All right, that's all we have time for, but still, thank you very much. That's Timothy Pope for us from Shanghai.